Welcome back to Real Estate. My name is Timothy Tay, Senior Writer at Ep3 Singapore. In this episode, we'll take a look at the resale market and find out what's behind its strong performance in recent months. In the private market, resale transaction volumes have peaked, and in the HDB front, there's been a surge in demand. I spoke to Ismail Ghaffar, CEO of PropNext Realty, to find out what's behind the strong performance and which segments have performed better. Last month, we saw the private resale volume fall nearly 30% due to the Phase 2 heightened alert disruption. But prices increased 0.9% month on month. What's supporting the buoyant performance in the private resale market?
We all witnessed a huge increase in terms of demand for resale properties. The ample liquidity have definitely helped, and as well as the low interest rate environment. One of the attraction about the resale properties, the per square foot has definitely been much lower in comparison to many of the new launches. And that means people are able to buy a bigger size property for a smaller quantum. We all know the construction delay for the new launches. Even a new BTO, now we are talking about 5 to 6 years, and many of the even private properties are delayed. But what is more interesting here is this: we are looking at the economy recovering positively, and the GDP expected growth is anything between 4 to 6%. When we talk about resale properties, not only upgraders, we are also looking at people who are buying a second property.
Which segments of the private resale market have performed comparatively better?
If we drill down in terms of the volume of transactions, OCR and RCR has done exceptionally well. In the first quarter alone, we witnessed OCR having 1,464 transactions and RCR is 596 transactions. In terms of percentage, they are 4% and 16% higher than the previous quarter.
Do you expect the price gap between resale and new launches to narrow as the demand for completed homes increase?
I don't think the gap is going to come so much narrower, because let's look at the land bid prices. And we are looking at land bid prices at Ang Mo Kio and at Farrer Road well above $1,100 mark. What does it mean? That means 12 months down the road, these are the land sites that are going to be launched at a price of $2,000 per square foot for an RCR and OCR product. However, looking forward, I think the resale property prices will inch upward, and that's mainly because of a stronger demand. A stronger demand generally tend to push the prices upward.
Besides the strong performance in the non-landed segment, what has been behind the strong performance we're seeing in the landed market in recent months?
When we talk about only 70,000 landed properties in the whole island republic, as compared to 1 million HDB homes and 300,000 condominiums, this is definitely a price item that a lot of people desire to have their own little garden. So we are looking at price at the highest growth, 6.7% first quarter, and looking at volume at the highest growth, more than 100%. People are coming to realization, buying a condominium, a 99-year leasehold, 1,500 square foot can cost up to $3 million, but a landed property at 3.5 or freehold, definitely there's huge upside maybe in the future and a different lifestyle.
The HDB resale market has made headlines in recent months as home buyers turn to resale flats to meet their housing needs as BTO projects face construction delays. I spoke to Stephen Tan, Managing Director of Orange Tea and Thai, to find out how this situation is impacting home buyers' decision-making and if the trend of high COV could continue. While HDB resale volume has dropped 16% month-on-month in May, resale prices have been relatively more resilient despite the disruption caused by Phase 2 heightened alert. In general, what is supporting the resilience of HDB resale prices over the past few quarters?
The HDB resale market is well supported by a few groups of buyers. The first groups are the buyers who formerly have intention to buy BTO flat, but because of the delay of the BTO projects, they decided to switch to the HDB resale market. The other group is those buyers that upgraded from a smaller HDB flat. Because of the pandemic, they are looking for a bigger space. And the other group of buyers is downgraders from private condos or bigger HDB resale flat. These are the buyers that potentially their income could be affected by the pandemic, or some of them may have intention to cash out in order to fulfill their retirement plan. The last group of buyers that we can see are those PR, especially from Malaysia. These are the buyers that used to rent a flat in Singapore, but now because they need to stay longer, they decided to buy after fulfilling the 3 years waiting period. And some of them even have intention to bring their family here to stay for a longer period of time.
Despite the dip in sales volume last month, do you expect viewings and transactions in June to rebound quickly?
Yes, we do expect the volume and the viewing to rebound quickly because we can see that there's a lot of pent-up demand in the market, as many buyers are holding back their purchase decision until they can view the properties.
How will competition for available flats impact the trend of high cash overvaluation in some locations?
I expect the average COV rate continue to climb slightly, but I do not expect to see a runaway situation. Currently, the average COV acceptable by most buyers is in the range of 30 to 40,000. For some popular location, it could go up to as high as 50, 60,000. If the valuation of a particular location is higher than the rest, the valuers handle the next transactions in the same location will likely match the transacted price to reflect the current market value.
As competition for available resale flats increase, more flats in new estates have reached their minimum occupation period in the last 3 years. As resale volumes in areas like Punggol and Sengkang climb, how will this impact the price difference between mature and non-mature estates? I spoke with Lisa Tech, Head of Research at Hardens Asia, to find out more. How have the prices and sales volumes in the resale market reacted to the large number of flats reaching MOP in the last 3 years?
So there is a preference and a demand in the market for flats that are younger, and sellers have actually reacted to this demand by putting out their flats for sale and then moving on to another property.
Traditionally, what has been the average premium for resale flats in mature estates compared to flats in non-mature estates?
The premium range from say 20,000 for 3-room to as high as 222,000 for a 5-room in that's the kind of premium that we look at. But on average, we are looking at something like 100,000 in terms of premium for a flat in the resale estate compared to a flat in the non-mature estate.
How have factors such as lease decay and the supply of new flats caused HDB resale premiums to narrow recently?
The decaying lease it could be a factor at play in the narrowing of premiums in the non-mature estate because of the influx of new flats being built over the years has actually caused the average age of 3-room flats to come down to less than 10 years. That has actually narrowed the premium paid for 3-room flats in the non-mature estate to the mature estate.
Why do you expect the price gap between flats in mature estates and non-mature estates to narrow over the coming years?
We have less available land in mature estates for us to actually build new flats, whereas compared to non-mature estate, we actually have more land. So when we build more in the non-mature estate, and these are actually transacted, this will naturally narrow the premium between flats in the mature estate versus non-mature estates.
What advice can you give to home buyers who are considering a property purchase this year?
Do take advantage of the low interest rate environment, because a low interest rate environment means that your monthly mortgage not only going to be lower, but huge part of your payment goes towards reducing your loan. Speak to any professional consultants, read up with many of the articles through the Edge Property or research materials that are available for you.
Know your needs and understand your long-term plan, so that you can do your financial planning to meet both your needs and also your future goals.
Thank you for watching another episode of Real Estate, brought to you by EdgeProp Singapore. Real estate, real opinions, real statements. In our next episode, we'll take a look at how the pandemic is changing home buyer preferences. See you then. If you found this episode on the real estate market useful or interesting, head over to ep3.sg and use our free Market Trends tool to find out what else is trending in the property market.